allow domestic institutional investors to invest in commodity markets for the very first time. Vijay joins in with the details of the proposal from the market regulator. Vijay, which category of domestic institutional investors are likely to be allowed by SEBI, and when can we expect this to happen?
What we gather from all indication that we are getting is that it would be mutual funds as a domestic institutional investor to begin with market regulator SEBI is looking at, which would be allowed for the first time in the commodities markets to be traded. Now clearly we all know options is an trade product in commodities market, which SEBI has given the in principle approval. All indication that MCX and NCDX are looking out starting options trading perhaps from January 2017, and that is where all indication that it's the same time where mutual funds also as DIS would be allowed to enter the commodities market. As we speak, the commodity exchanges, SEBI and some top fund houses are in discussion and the final contours are being worked out. Also clearly market regulator SEBI would like mutual funds to begin with because it directly comes under the jurisdiction. They are also in talks with RBI to ensure going forward after mutual funds things stabilize, banks can also be allowed as another category of domestic institutional investors. So clearly, as a SEBI chairman is already on record, slow but incremental reforms will happen, but clearly come 2017, and if I could say, this would be the equity time for the commodities markets. Clearly this would enhance the liquidity and volume, and it would be a huge up for the commodities market, and all indications leading that in 2017, as and when the options begin, mutual funds as DIIs would also be allowed to trade and in the commodities market for the first time in the country. And quickly, if we could also hear in what MCX MD and CEO Paranjape had to say on the what is the plan for 2016 when we caught up him over just a couple of days back.
Late 90s was when the Indian equities market really went through a transformation. I see that similar phase for commodities now. We've seen the sort of moving together of the regulators. SEBI has taken over all the functions of FMC, integrated them very well. And what we've seen in this 1 year is the laying of the foundations for a really solid future. The risk management systems, SEBI has made sure that we are really absolutely where we should be. A lot of detailing has gone in, and I think with the announcement that options are already on the anvil, we should see really historic things happening. First, products will go. We will definitely have options, but we are also hopeful that in the time to come there will be indices, there will be even other more exotic ones like weather derivatives, etc. The other very important development from our perspective would be that institutions, I think, will be allowed on this market. In anticipation for that, we have applied to SEBI for the operationalizing of our clearing corporation. We expect that to happen in the next 6 to 7 months. So again, will be a very important, both from the market as well as from MCX point of view, a great year, I think.
Okay, thanks Vijay. Thanks for getting us this story at 9:19 or 9:20 a.m. If you were watching, you knew about this story. The stock has given you a 7% return intraday since then. Now CK, my question is, MCX typically has retreated after hitting these 1350, 1375 odd levels in the recent past. This move is sharp, strong, a company with volumes. Would you go out and trade MCX?
Well, I think if I'm a slightly longer term investor, I would definitely look to be holding on to MCX and going long on it at every dip. And today's price action probably is indicative of such longer term players coming back into the stock on some news. Now we may all have different viewpoints on the viability of all this, or the time frame when they will get implemented. But the fact remains that MCX is on a very firm wicket as far as the price moves are concerned, and today's price action only reiterates that particular belief. And I would definitely go along even at the current level of about 1245, 1250, with at least a short-term expectation of a price target around 1365.
All right, that's a quick view coming in on MCX, which is the stock of the day, up 7.5%. But Praveen Sood joins in for a quick reaction to the news development. The SEC-led joint venture backs contract worth 374 crores, and things are